Good afternoon, everyone, and welcome to Wally's World of Personal Finance, Episode 5. We are going to talk about FHA loans because I've got a few buyers that are approved FHA, and I keep getting the same question: is there any way to get a conventional approval because realtors won't take my offer because I'm financing FHA? Well, this is really the cause of a myth in the FHA approval, and I want to go over that. I also want to go over some of the benefits of FHA versus conventional, and hopefully by the end of this video you'll understand why FHA is a viable, good option to use financing. Is it the best option? Well, sometimes it's not. It's really a matter of perspective, and it's a matter of what your credit looks like and some other factors. So let's take a quick look at what the good points about FHA are. First of all, conventional loans require a 620 minimum score. So if you have a 620 minimum middle credit score, you can go conventional possibly, but under 620 you need to do FHA. Now, I'm not going to say every bank does FHA under 620. Some banks have a higher credit score standard, but I'm just talking in general terms here. So when you go to talk to your loan officer about getting approved or your particular situation, some things may be different from what I'm telling you in terms of credit score approval. And by the way, just having a credit score does not mean you will get approved. I see plenty of buyers on conventional side with a 680, 700 credit score that do not get approved. There's a number of factors that go into everybody's situation and whether they're going to be able to get approved or not. So talk to a mortgage professional about your particular situation, and you can get a much better idea as to what's going on. Okay, so let's go over what the good points are about FHA. First of all, we have the under 620 credit score for people that have either challenged credit or sometimes it's a matter of not having enough credit. If you're just starting out, you're just out of college, sometimes you don't have a lot of credit built up, so your credit score is going to be a little lower. That's perfectly normal. There's nothing wrong with that. And as you build your credit, obviously your credit score will hopefully increase, and the second time you go for financing, maybe it'll be conventional. Okay, second thing is bankruptcy requirements. If you are 2 years discharged from a Chapter 7, you can go FHA, versus conventional makes you wait 4 years. Same with a foreclosure. Foreclosure, you can do 3 years FHA versus conventional 4 to 7, depending on the circumstances. Okay, so those are two very good reasons. Next is debt to income ratio. FHA does allow a little higher debt to income ratio under normal circumstances than conventional does. Not every case, but in my 30 years experience, this has been the case. So again, you're going to talk to your loan officer about your particular situation, but in most cases that is true. Now, let's talk about some of the bad things about FHA. Okay, so FHA has mortgage insurance no matter how much you put down. So you could put 50% down and FHA will require you to have mortgage insurance. Why? Because FHA stands for the Federal Housing Administration, and FHA loans are backed explicitly by the taxpayer. And so the government has a fiduciary responsibility to the tax holders to make sure if something does happen to the house that goes into foreclosure, that there is a pool of money sitting there so that the bank is not going to lose money off of FHA loans. And like it or not, that's the way that FHA works. It does expand the number of people that can afford a home, and that's what FHA is all about, expanding the possibility of home ownership. Now, whether that's something that you want to do or not is entirely up to you, but at least you have the option to do it. The other thing with FHA, now, when I say no matter how much you put down, there's mortgage insurance, if you put less than 10% down, you will have FHA mortgage insurance for all 30 years. So if you put 3.5% minimum required all the way down to 9.99%, you will have mortgage insurance for all 30 years. It never drops off. Versus conventional, it'll drop off after about, say, if you put 5% down around 11 years, give or take, 10% down, maybe 7 or 8 years, 15% down, maybe 4 to 5 years. Again, these are just generalities. I can give you much more specifics if you reach out to me with your personal situation. But with FHA, you carry that mortgage insurance for the full term. Now, that doesn't mean you can't refinance and get rid of it. It doesn't mean that you're going to sell your house and, then you'll get rid of it, obviously. And that's the other point I want to make, is that when people talk about mortgage insurance, and FHA loans have mortgage insurance for 30 years, FHA loans are mostly used, not explicitly, mostly used for first-time home buyers. And most first-time home buyers are out of that house in 5, 6, 7 years because they want to move into a bigger house. Their family's expanded. They want to get into maybe a better school district. They move out of state, whatever the case may be. Most people don't hold on to their mortgage for more than 7 years. So really, if you take a look at putting 5% down conventional or 3.5% down FHA, you're probably paying mortgage insurance for the same amount of time. Okay, so those are a few of the benefits. Now, let's get to the big misconception here about why realtors don't want to take FHA financing. And I want to say that this isn't all realtors. There's some great realtors out there that work with FHA all the time, but in my experience, it's the ones that don't work with FHA all the time. They think a lot of people are under the assumption that there is a separate FHA inspector, and there isn't. There's an FHA appraisal, just like there's a conventional appraisal. But the FHA appraiser is trained to look at more safety issues. So things like ripped up carpet, broken tile, are hazards, missing handrails from stairs. Those have to be done and fixed before the buyer can move in. So it's an expense to the seller that they have to fix these things if those things are broken in the house. So because FHA will not allow someone to buy a house and then trip and break their neck on some tile, right? Conventional, yeah, maybe it can pass. Okay, it's a little bit more lax guidelines for the appraisal. Now, one other thing that really irks realtors is the peeling paint issue. So if you go to buy a house and it's, say, 20, 30 years old, and there's some peeling paint around the windows or the garage, on FHA, that has to be scraped and painted before the buyer moves in. And why? Because it's a safety issue. That's right. Paint is considered a safety issue if it's peeling because kids can and do pick up the pieces of paint and ingest them. And especially if it's a house that's built before 1978, there was lead paint used in that house. So we obviously don't want kids ingesting lead. So it's a safety issue. So it's got to be scraped and painted before the closing. So that is the big reason why if you're using FHA financing, that it's a lot tougher to get financing because people are worried about this FHA inspection. And I know some realtors say inspection, they mean appraisal, but there are a lot of realtors I run into that think that there is an actual secondary FHA inspection besides the FHA appraisal, and that is not the case. So again, FHA is a valid way to finance. You should work with your loan officer to determine if it's the best way for you to finance. Maybe conventional is, maybe FHA is. One other point I want to make, I missed it earlier when I was talking about the benefits of FHA. If you have a lower credit score, and by lower credit score, I'm going to say anything under 700 credit score, and really, especially for conventional, under 680. If you have a 660 score or a 640 score, you could go conventional. But conventional, the interest rate is going to be much, much higher because conventional uses risk-based pricing. FHA generally has one tier of pricing. If you fit with FHA, this is the rate. Okay, they do have some nuances, but not nearly as many as conventional. So if you're looking at a conventional loan, your interest rate could be quite a bit higher, and I'm talking 0.5% to a full percent higher than FHA on that same loan. So again, it behooves you to take a look, go over the different financing options with your loan officer, and determine what's right with you, what's best for you. I think that's enough of my rambling for today. So I really hope you enjoyed this this episode. I hope it was informative. If so, please let me know in the comments. I will be uploading much more content. I noticed that my last video upload was 2 months ago, which is way too long. Hopefully it will be weekly from here on. But there were a lot of things going on. I had to move, and there's just, between the packing and then the unpacking, time really got away from me. So I am going to be doing more personal finance videos, but I will also be doing some mortgage videos. I also have those interview videos that I want to do, one with a CPA, one with a financial advisor, some other ones. Something you want to see, if there's something you want to see, just let me know in the comment section, and I'll make sure it happens. All right, thank you very much. You guys have a great day. Bye-bye.